Alright guys, I'm back with another video. So this one is just gonna be a quick one. What I've noticed lately, now before I go any further, I own GameStop. I'm gonna talk good about GameStop. I don't own AMC in shares, but I have one put position open. Just one put position, one contract, okay? At $1 in 2025, and I paid $15 for that one. Now, the reason why I do that is because, hey, it might hit big, right, in the downturn. No, I'm just kidding. Now, my heart goes to the people that still hold the shares of this particular company. I used to be an investor in AMC, but there's so many things that happen that give me the absolute like I'm convinced that the CEO of the company do not want this company to succeed in the way that retail investor want it to be. Of course, I want the theater to succeed, but the leader does not want that. So when you have the CEO steering the ship of this company, spearheading the company, you better believe whatever he's trying to do. Now, I'm of a belief that action speaks louder than words. So no matter what he's speaking to you as a shareholder, oh, I'm pouncing, or I'm making, the hedge fund out there blaming the short sellers and all that stuff, but then go behind closed door to do business dealing with these short sellers and then to try to save the company. This is bogus, because in every step of the way, this guy, Adam Aaron, Adam Aaron, I don't have his picture here, but the CEO of AMC never do anything right by retail investor, right? Now, again, he would come out and say, well, what do I know about running a company? Multi-billion dollars. I'm just armchairs quarterback or something like that. He was saying the other day. But at the same tokens, every single time AMC run up, he would come out and say, remember when the lawsuit happens and AMC went up like dramatically? I think it was this one right here, this day. When the judge or the lawsuit seems to go to retail side, he came out immediately after and say, hey, we need to raise money, just be careful, our cash burn is high and we need to still raise money. And around that time, obviously the judge was delaying the lawsuit, meaning that the reverse stock split was not supposed to go. But then when the reverse stock split decided to kind of like, when the judge kind of granted the settlement, the stock dumped immediately thereafter. And from then on, it went from $46 there down to now what it is, $7. And it's a very, very telling to me that, he will never let this stock goes up in price, because that means what? That means that the people that he actually work for will not benefit from this, because they want this company to go down, because this is how they get paid more so than the company going up in price, because it's going to take this company a long time to build $1 billion rather than burning cash billions of dollars every year, every couple years or so. So again, this is the playbook. Obviously, if you listen to Moran's Rant, obviously go subscribe to him. Had a lot of subscriber lately, so please do that. If you're new to this channel, go to subscribe to him or to Moran's Rant. He will explain to you a whole bunch of stuff, and he does a lot of AMC video, And of course, when he does that, usually he's negative about AMC, so his video doesn't get pushed out that much. But if you hold on, let me see which one is. See, AMC, Chill, whatever, never got pushed out that much. And these are real views, by the way, so it wasn't like being, yes, a little bit. But if you are turning positive about AMC, you see what happened. Boom. You have a lot more views there, but in comparison to his subscriber base, it might be the same amount. But my point is that when they push out AMC in the positive, they always have a lot of interaction there. Yeah, but I mean, this is just my observation on the people that are normally not into AMC, investing in AMC. They post stuff like this where, oh, hey, I'm buying in, right? Now, again, I have nothing against this guy, but it's just that, he had a lot of subscriber out there. And so his view, his push, his influence is going to be massive on the masses, right? And I don't know. Again, I don't know if this guy get paid to say what he says, to do what he do. He's probably just looking to, earn a few bucks here and get out before, the retail investor out there. Now, if you believe in the narrative that the company is doing better and all that stuff, I highly recommended you to go to look at their balance sheet yourself, because that's going to present you with a different light, okay, different perspective on this. To say that the company is doing better and better is an understatement, because if you look at other metric here, they are losing money. Cash flow per share is actually more than the share that they are traded in the market right now. See that? 7% versus 7%. $7.62 at the current price right now versus losing $7.93 per share. Okay. Now, if you do a trailing loss, now this is kind of a little bit more representative of how much they lose, is $4. So half of it is in the negative. Also, if you do the trailing 12 month, you could see that the shareholder equity is lower. And then they have a debt of $9.9 billion total debt. Long-term debt, look at this, $8.9 million. That's ridiculous. And when they say to you, oh, we're paying off debt right now, $100 million in a year. No, sorry. Yeah, in the trailing 12 months. So trailing 12 months, they didn't do much. Now, if you look at the quarter base, same. So $100 million. That's a drop of the bucket. Yes, they are lowering it little by little, but it's going to take at least 10 years for you to do this. 10, 15, maybe 20. By that time, the cash burn is going to be more. Okay. So you see this right here? Right here. Net cash position is $9 billion. That's insanity. So that means if they file for bankruptcy right now, they have no way to pay you, shareholder out there. No way, because there's $9 billion in the book right here. So all of this asset that they have, $9 billion worth of asset, cannot cover the debt. even the debt, not even all of the liability, you guys. So please, please look at this and know that you lost this fight as a retail investor. Number one, you don't have the CEO that want this company to succeed. He doesn't. I'm sorry to tell you that, because history tells you that. Okay. So, man, I don't know how long they could drag this, because again, we're in a recession. We're not gonna be able to make it. The stock market's gonna come down. The S&P 500 is gonna come down because the Fed decision to keep the rate high at 5%, 5.5%, and then next year he's gonna raise even more. So consumer has been squeezed down to the penny. So I don't know how long this company is gonna stay in. I'm sure they're gonna stay open as long as people keep pouring money into this and lose a whole bunch of more money into this. So as far as GameStop though, I'll make a video about it later on. But for this one, I just want you to be careful listening to these people. Obviously, if you do, just quick in and out. Don't hold this stock for long. I hate to say that because, there are other people who tell you to buy and hold, and this is what the trap is. The trap is that, oh, hey, you have to buy and hold in order to win this battle. Well, here's the thing. Here's the news for you. In order for you to win this battle, yes, you have to buy and hold, but the company itself, the leadership, the path to profitability has to be there for you to have that longevity. Because if you continue to buy and hold a company that is going to go to bankruptcy, you will not get money from that share. Just like I showed you, AMC is massively in debt. They don't have the asset to keep going because, again, they have more debt than asset. More debt than asset. And so the ability for it to pay is down to nothing. Nothing at all. Okay? It's in the negative. You want this to be positive one. Okay? You want this to be positive one, because if it's lower than that, that means that they have a harder ability to earn it. You see? It calculates interest ratio is a measurement of the ability of the company to pay its interest. This is just interest expense. I'm not talking about any other stuff. Interest expense is in the negative. Okay? So that means they have to make, I don't know, let me see, what's the balance sheet here? Hold on. So you see this total debt here, but let's look at the long-term debt right here. When you look at this long-term debt, they need to make at least the profit. Okay, I'm not just talking about anything. They need to make whatever the amount. How much are they paying? Like 8% or something, or 7%? They had a filing earlier. If you invest in this company, you should know how much percentage they're paying every single quarter. So every single year. If you do point whatever times, I think 6%. Let's go with 6%. So they have to make $500 million just to cover that. Okay, so if they do that consistently, they would hit this right here, but they didn't. They did not. Okay, and the revenue that they keep saying, oh, we have tons of revenue here. Well, Look at the cost. So they need to double this amount. No, not even double. They need to add $500 million worth of gross profit in order to break even. Okay, so yeah, I mean, I don't know if it's doable. It's going to be a miracle if they could do that. But again, currently it's not a good look for AMC. I'm sorry to say. I'm so sorry for man. But anyway, hey, Jimmy is doing swimmingly. I'll do a video about this one. But yeah, so I'll end it here. Okay, bye.